Hello and welcome to the latest edition of The Exchange, brought to you by the New York Stock Exchange. I'm Douglas Jonas, your host. As a reminder, today's interview is for informational purposes only. The NYSE does not recommend investments or investment strategies. We are live on the floor of the exchange with David Albrycht. He is the president and CIO of NewFleet Asset Management. David, thank you so much for joining.
Thank you very much for having me.
So right now, I mean, the headlines are out there: inflation, yield curve, rising interest rates. Could you talk a little bit about the opportunity set as well as the risks in today's current market?
Yeah, I mean, I would first and foremost talk about a few things. The virus and the pandemic, don't be dismissive of that. Obviously, new vectors and new variants. We'd love to have it be an endemic. Secondly, I would talk about politics. Now we have gridlock. We have the Senate controlled by the Democrats, the House controlled by the Republicans. Geopolitical risk, you can't forget that. We have Russia, Ukraine, obviously weaponizing energy, shutting off gas to Bulgaria, Poland, Italy. Watch your German winter. We have to worry about supply chains. They're 30% of the world's wheat supply. Obviously, food is a big consideration with inflation. And then China, China with a zero COVID policy always impacts supply chains. If we look at the crackdowns, they did crackdowns on gaming, tech, education, and we know what's going on in the real estate sector right now with Zinru, Fantasia, just to mention a few. So they're trying to funnel money back in that. They'll obviously help the people who put money in before they go after help the bond holders like us as investors. But as far as the single biggest risk out there, hands down, is inflation. And our Fed is hell-bent on taking care of the inflation problem. They're going to be very hawkish, as we've seen. Unlike the Bank of Canada, the BOE, the Bank of England, who's turned a little more dovish, they're staying hawkish. We had Ballard come out today and talk about a possible terminal rate of anywhere from 5 to 7%. So maybe to put the brakes on everybody getting really excited about two data points, CPI and PPI.
So we talked a lot about some of the risks that are out there. We're starting to get into fixed income. I'm hoping you'll dig a little deeper there, right? So when you're looking at the fixed income sector, if you will, do you see opportunities out there?
Value's been restored to fixed income. If you came into the year, investment grade bonds were trading at 2, they got as high as 6%. High yield market was trading at 4 with leveraged loans. Now those got up to anywhere from 9 to 10%. Emerging markets, value we haven't seen going back to the global financial crisis. Yields on IG around 9%, about 8%. Yields on the overall market, about 8%. High yield, about 13%. We think there's tremendous value in the market. Securitized product, coming into the year, investment grade was about 2%. Now we're 5 to 6. So value's been restored, and especially if you look at the muni market. We haven't seen value like this in the muni market going all the way back to 2009 or prior. Taxable equivalent yields on investment grade are mid-6s. High yield are right around 10%. That makes a lot of sense. When fundamentals there are excellent, you've had 113 billion of outflows. Most of the impact is the move in rates. Fundamentals are still good. Property revenues are up. All the unfunded pension liability states, like if you look at New York, New Jersey, Connecticut, Illinois, California, all in better shape. So there's great opportunity in fixed income. Great time to be an investor. You definitely want to be dollar cost averaging in the current market.
So we were talking a little bit before this about some of your international weightings and being at really multi-year lows, particularly in some of the different sectors. Is that changing? Do you see a difference moving forward?
So prior to coming to the pandemic, we looked at emerging markets. We thought it was very full on a valuation basis. You weren't getting paid. You never want to fight the Fed raising rates. You never want to fight a strong dollar by buying local currency. So our overall allocation has been very low. Every once in a while, we find some type of value. Dominican Republic, after Russia invaded Ukraine, traded off with no economic or geographic relationship. Egypt with IMF support. Pemex on a valuation basis. Holding South Africa and Indonesia as high quality investments. So there is an opportunity there. We are definitely moving to adding exposure. It's all about timing. If the Fed decides to pivot at some point, they decide to stop, we see the dollar weaken, we'll get into into emerging markets in an aggressive way.
So let's talk a little bit more about the Fed, right? We've got the Fed out there shrinking their balance sheet. How does that impact the way you look at the mortgage market?
Well, Powell's came out explicitly and said they're not going to sell mortgages or outright sell from their balance sheet. He's been very open with that, telling people. So what we see is they have a $35 billion cap. Right now, about $23 billion rolled off last month. It's even going to be less. Because you know why? Because they've already raised rates and it's doing the job that the Fed wanted. New housing and starts and permits are down. You're seeing builder confidence is down. So the market, it's already done what they wanted to. The average mortgage rate's gone from 3.5 to 7.09. So you're not going to run out and refi your house, and there's no more cash out refis. So the Fed has already done its job by crushing demand.
Interesting, interesting. Now, for investors, advisors that want to learn more about NewFleet and some of the different research you guys are producing, is there a good spot for them to go?
Absolutely. You can either go to the Virtus website to find information on our ETFs. We have a intermediate duration unconstrained ETF called NLFT. We have a VABD ETF, which is a securitized product, very short and high quality. We have BLHY, which is a high yield ETF. We have many different ways to access the market, but you can do that on the Virtus website.
Perfect. And as a reminder, you can find more about the NewFleet ETFs on our website, etfcentral.com. Easy to remember, etfcentral.com. All brought to you by the New York Stock Exchange, the home of ETFs.